This video on the channel Blocks Bonds Funds is created for educational and informational purposes only and does not constitute financial or investment advice.
Welcome back. So far, we've laid all the groundwork, piece by piece, for the Ethereum system. Now, it's time to assemble those pieces and see the bigger picture: decentralized finance. And look, we're not just talking about a collection of apps here. We're talking about an entirely new financial system. So let's see how it all clicks together.
We're going to break this down into 4 key parts. First, we'll place DeFi right into the system we've already built. Then, we'll get into what you can actually do with it, the core functions. After that, we'll look at the unique properties that make this whole system behave so differently. And finally, we'll zoom all the way out to see the new financial architecture as a whole.
All right, let's get started by adding that final, really critical layer to our architecture.
Just to quickly refresh our memory, this is the foundation we're building on. We've got the execution layer handling transactions, the gas layer managing costs, the token layer giving us those programmable assets, and of course the stability layer, which gives us a reliable unit of account with stablecoins. So we have all these incredibly powerful components, right? But how do they go from just being lines of code to becoming a real, functioning financial system? What's the magic that brings it all to life?
Well, the answer is Decentralized Finance, or DeFi. DeFi is the layer where all these building blocks finally combine to create actual financial services. And its core innovation, the big idea, is replacing traditional middlemen, like banks, with smart contracts. You know, that self-executing code that just runs on the blockchain?
So if we break it down, there are really 3 essential ingredients. First up, you've got smart contracts. They provide the automated logic, the if-this-then-that rules of the game. Second, you have the tokens, things like the common ERC20 standard, which act as the programmable assets. And third, you absolutely need stablecoins to give all this activity a reliable and predictable value. Okay, with those components in place, let's move on and see what fundamental financial actions, or what we call primitives, this system actually enables. The first core function, at a pillar of any financial system, is lending and borrowing. But here, it's run entirely by code. What this means is you can get capital efficiency without needing a bank, without a credit check, and without asking for anyone's permission.
So how does it actually work? Well, lenders start by depositing their assets into a big shared liquidity pool. Borrowers can then tap into those funds, but, and this is key, they first have to lock up collateral that's worth more than the loan itself. It's a critical safety net called over-collateralization. From that point on, the smart contract just takes over. It automatically sets interest rates based on supply and demand, and it distributes the earnings back to the lenders. The whole thing runs without a single loan officer in sight.
And a perfect example of this in the wild is the Aave protocol. It's one of the biggest decentralized lending platforms out there, and it just automates this entire process through its algorithmically managed smart contracts. Okay, so on to the second core function, trading. In the world of DeFi, this happens on decentralized exchanges, or DEXs. These let you swap assets without having to rely on a central company to match buyers and sellers. So, how on earth do you trade if there's no central company matching all the orders? The answer is this really revolutionary idea called an automated market maker, or AMM. Instead of trading directly with another person, you're actually trading against a pool of assets. And those pools, they're filled by other users. We call them liquidity providers, who deposit pairs of tokens to earn a slice of the trading fees. The price isn't set by bids and asks, but by a simple, elegant mathematical formula that's always adjusting based on the balance of assets in the pool.
And you can't talk about AMMs without talking about Uniswap, the pioneer of this model. It uses this simple formula, X times Y equals K, to create a huge liquid market. The most important thing to get here is that you can swap tokens directly from your own wallet without ever giving up control of your funds to a central exchange. It's a total game changer.
So we have lending and we have trading. But what happens when these things start interacting with each other? This brings us to the really unique properties that emerge at the system level.
The most powerful of these is composability. You'll often hear it described as money Legos. Because every protocol is built on the same open standard, they can all be snapped together. A developer can literally take a lending protocol like Aave and plug it into a trading protocol like Uniswap to build something brand new. This ability to build on top of what's already there is what fuels so much of the rapid innovation in this space. And this slide really highlights the fundamental split in architecture. Traditional finance is permissioned, you need to be allowed in, and it relies on opaque institutions. DeFi, on the other hand,
is open to anyone. It operates transparently through code, and you are always in control of your own funds 24/7. It's a completely different paradigm.
Now, of course, this open architecture isn't without its risks. Code can have bugs. Price data feeds can be manipulated, and volatile markets can trigger these cascading liquidation events. To deal with these challenges, the system has another unique feature: decentralized governance. Instead of a CEO making all the calls, many of these protocols are actually managed by their communities, where token holders can vote on everything from risk parameters to major software upgrades.
Okay, let's put it all together now and take a look at the complete architecture.
You can see here in the full system stack how the DeFi layer isn't just floating out there in space. It's the final piece that sits right on top of everything else we've talked about: execution, cost, assets, and stability. It integrates all of their capabilities into one coherent working system. And this really brings us to the single most important idea to take away from all this. Try not to think of DeFi as just a bunch of apps. Think of it for what it truly is: a complete, parallel financial architecture built from the ground up with programmable, interlocking parts.
What you end up with is something genuinely new: a financial network that is fully functional, completely transparent, and entirely programmable, all operating on a global scale without any central points of control.
But seeing this complete system laid out raises a fascinating question. We've seen how trading can happen inside DeFi with DEXs, but they aren't the only game in town. So how do they really stack up against the traditional exchanges that we're all so familiar with?
And that's exactly what we're going to explore in our next explainer. We're going to do a deep dive into the architecture of exchanges, comparing the centralized and decentralized models side by side. Thanks for watching.